Okay, so let me come to, before we talk about the outlook of equity markets, we will seek your views. But then before that, I just want to understand, you talked about your product. So how is ICICI placed for AIF PMS now that you are heading the complete department out there? And if I am the investor, which fund should I choose in ICICI?
Okay, so let me first talk about the company. I think we've been investing, or rather we've been developing capabilities across the alternates business. So we already had long only PMS for now more than 20 years. We also had real estate alternates business, and we also have a long short category of the alternates products, which is under the AIF route.
Yeah.
Then now we also have fixed income. So corporate debt opportunities is what we are offering again within the AIF route.
Sure.
So I think we are really investing and developing the alternates business, which includes the long only piece, which we are talking about. But apart from that, there's a long short, there's a fixed income, there's a real estate and others. Within the long short, we have both the PMS as well as the AIF.
In long short, you have AIF and PMS both?
No, in long only we have PMS and AIF both. In the long short, we have only AIF.
Sure.
So within those PMS and AIF, we have various products, but I think the more relevant products which are generally there is flexi-cap and mid-cap. I think these are the two categories where we believe the most potential for alpha generation is there. And that's where most of our investors also are existing today.
Sure. Can you talk to our investor and talk about your track record, like how long you've been doing this PMS and how has been the performances so far, the one which is delivered?
Sure. So we have been in the PMS business now for more than 20 years. We have our flexi-cap product, which is has a track record of more than 20 years. And
what is the name?
Flexi-cap.
Flexi-cap. ICICI Flexi-cap PMS, right?
ICICI Prudential Flexi-cap PMS. Apart from that, as I said, there is two new products which we have launched very recently. One we launched in 2018, which is the Contra PMS, and Pipe, which is again a small to mid cap product which we have launched 3 years back, is in the mid and small cap category.
So Pipe was launched in which year?
2019.
19. Okay, sure.
So these are the two products which we have launched, and they're doing fairly well.
Yeah, I see, because we consolidate the performance, and I see every time it's coming under quartile 1. So I was asking you the second question, that what is working so well for you that the performance is so superior?
So I think as a philosophy, we believe there are two paths to the wealth creation. Price of a stock is a function of EPS and PE multiple.
Right.
So the delta price, which is the growth, the wealth creation, the growth in the value of a company, is achieved by the growth in the EPS or the growth in the PE multiple. Now this growth in the EPS is well understood. We have been growth investors forever, for last 2 decades. Everybody understands that India as the economy grows at 11 to 12%. The good companies will grow earnings at 13 to 14% at the aggregate level. So that is the delta EPS.
And you're able to track it also very well.
Yeah. Actually, if with all the active risk that we take, we are able to actually try and do better than that.
Sure.
But I think the big science or the big wealth creation, if I see over last 15 years, have been in the delta EPS, delta PE multiple, my apologies.
PE multiple.
So, are you able to identify businesses which are today trading at a lower PE multiple, but they have potential to trade at a far higher PE multiple in times to come? And that comes from the return on equity. I think if there is a business today which is at a low ROE, but has a potential to trade at a high ROE, and that's where we keep on investing. Every stock that we invest in needs to have a sustainable competitive advantage, a right to win. Typically, अगर आपका business अगर commoditized business है, जहाँ पे कोई भी enter कर सकता है, अगर आप high ROE बनाओगे तो competition enter करेगा और ROE नीचे लेके जाएगा, which is typical commodity business.
Right.
But within commodity business or within cyclical businesses, is there a company जिसके पास एक सस्टेनेबल कॉम्पिटिटिव एडवांटेज होता है. आज B2C बिजनेस में क्यों हाई ROI होता है? कि ब्रांड की वजह से आपको प्रीमियम चार्ज करने को मिलता है. सो इवन इफ यू आर मेकिंग हाई ROI, द न्यू प्लेयर हु डजंट हैव अ ब्रांड वो हाई ROI नहीं बना सकता. But similarly in manufacturing business and others also, if you have a technology, if you have a low cost access to the raw material, you can sustainably make high ROI. So we keep on looking for businesses which have a right to win, which have a sustainable competitive advantage,
Sure.
so that they can survive the downturn and make high ROI in the long run. Today, in last 2 to 3 years, actually last few years, but more importantly last 2 years, we are observing that entire decade before 2020 was a first decade for a manufacturing sector, because China had overcapacity of everything. So they were exporting deflation to the rest of the world, which means from safety pin to boiler, from tires to tiles, everything can come from China.
True.
So if you are manufacturing that in this country and you didn't have a right to win, you didn't have a sustainable competitive advantage, you were finished. And that is exactly what has happened. Many a manufacturing industries had to close outside China.
Yeah. It was a lost out decade for manufacturing.
Yes. Fast forward today, whatever has survived in manufacturing today will benefit as China becomes uncompetitive. China's labor cost is going up, China's pollution cost is going up, China's incentives for exports are going down, and their energy costs are also going up. So the China's competitiveness in manufacturing, which was derived from all these 4 factors, are becoming lower and lower, while they still have the scale advantage. Even today they have 50%, 55% market share in many categories.
Right.
So they are going to be the force to reckon, but incrementally. It is the manufacturing outside China which has a right to win, and that's where we are focusing today. So last 2 years, 2.5 years, even during this last difficult 1 year, when there has been a lockdown in China or there has been a slowdown in Europe, the manufacturing sector has been fairly resilient. So both our contra and pipe portfolio has more overweight positions in the manufacturing and related sectors, and we are a little bit underweight on the B2C businesses, because in the same breath, let me also tell you that the B2C business were one of the biggest beneficiaries of China exporting deflation. जब चाइना सब चीज़ सस्ती बेचता था, तो the consumer facing businesses got raw material cheap, उनके मार्जिन एक्सपांड हो गए बिटवीन 500 to 1200 basis points in last decade. आज जब चाइना will export inflation, means your raw material cost will go up. Whether you will be able to pass on full or half is to be seen. So depending on your brand, you will be able to pass on some, you might not be able to pass on some margin hit you have to take. And to that extent, we believe next few years, what we have seen in the past, the profit growth rate in consumer facing businesses might not be repeated. So this is how we've been underweight that segment, which is, to be very honest, also extremely expensive for the future that we are seeing for that sector. At the same time, our overweight positions in manufacturing and manufacturing allied, including financials which had lent to that manufacturing sector and suffered a few years back, will also benefit most as there will be more recoveries from it.
Right.
So that has been helping the portfolio performance.
Sure. Great, amazing. Good to know that.